The Precious Metals Week in Review, March 4th, 2016. Brought to you by Precious Metals International. Stock market volatility continued this week, seeming to hinge heavily on improvements in the price of crude oil. The number of Americans filing initial claims for state unemployment benefits rose by another 6,000 claims last week to a new seasonally adjusted level of 278,000. The prior week's claims were unrevised, and last week's data falls outside of the reporting period for February non-farm payrolls report, which was released on Friday morning. February's non-farm payrolls report showed that job additions to the U.S. economy were better than expected. The report showed the addition of 242,000 jobs to the U.S. economy in February, beating economists' expectations for the addition of 192,000. The unemployment rate remained unchanged at 4.9%, and December and January's reports both saw revisions to the upside. Despite what appears to be an extremely positive set of data, there were some key factors which remain concerning about the true state of the U.S. economy. Average hourly earnings declined, hours worked declined, and a large majority of the jobs that were added to the economy came from part-time sectors such as the restaurant and retail industries. Declines in hourly wages are of particular concern since that is an indication that inflationary pressures are extremely low in the U.S. economy. Reuters reported this week, citing two reliable sources, that China intends to lay off a staggering 5 to 6 million state workers over the next several years in an effort to reduce industrial overcapacity and pollution. The layoffs will likely cost the Chinese government billions in relocation funds and could trigger a rash of debt defaults as local businesses who are forced to shut their doors find themselves unable to repay loans. The news comes just after recent reports indicate further slowdowns in China's factory activity. The official Manufacturing Purchasing Managers Index (PMI) for February came in at 49, 1 point below the level of 50, which is the line between expansion and contraction. A private reading of PMI provided by Cakeson showed an even lower level of 48. Moody's ratings agency this week also cut its outlook on China's credit rating to negative from stable, citing a weakening of fiscal metrics and a continuing fall in foreign exchange reserves. The United Nations (UN) voted to expand existing sanctions on North Korea following its nuclear test in January and a long-range rocket launch in February. U.S. Ambassador Samantha Power said the sanctions go further than any UN sanctions regime in 2 decades and aim to cut off funds for North Korea's nuclear and other banned weapons programs. The new sanctions call for the inspection of all cargo going to and from North Korea and place North Korean trade representatives located in Syria, Iran, and Vietnam on a UN blacklist. Previously, shipments to and from North Korea were only inspected if there was reasonable grounds to believe they contained contraband goods. North Korea's response to the news was to fire what appeared to be several short-range missiles into the sea off its coast, and to order its military on standby for nuclear strikes at any time. The escalating rhetoric out of North Korea is typical ahead of the yearly joint military exercises which the U.S. and South Korea carry out every year at this time. But the recent display of its nuclear ambitions and capabilities is concerning nonetheless. The European Union (EU) announced a new aid program on Wednesday that would essentially create a disaster relief fund worth up to 700 million euros initially. The program is being created in response to the growing migrant crisis that is crippling countries such as Italy and Greece in particular, whose economies are still struggling to make a comeback from the great financial crisis. Greece, which has become the main channel through which migrants flow into the rest of Europe, has asked the European Union for 480 million euros to help it address the massive influx of refugees. The situation in Greece has become even more urgent as other EU members have closed their borders to additional migrant refugees, leading to a growing number of the displaced being stranded in Greece and escalating the crisis even further. Oil prices continue to improve this week, heading into the mid-$30 a barrel range. Friday's better-than-expected non-farm payrolls report in the U.S. sent oil higher by another 4% as traders seem to speculate that the U.S. economy might actually avoid a recession, despite obvious continued pressure to the downside from a faltering global economy. The euro began the week trading basically sideways against the US dollar, then had a brief spike higher from which it quickly dropped and then traded flatly lower against the dollar until Thursday. On Thursday, the euro began moving higher again and went positive for the week late that afternoon. The euro moved higher again on Friday and will close the week positive against the US dollar. The Japanese yen began the week moving higher against the US dollar, but had peaked by Tuesday and began a decline which sent the yen negative against the dollar by mid-Wednesday. The yen quickly recovered some ground and traded basically sideways in a series of small peaks and valleys for the rest of the week. The yen will finish the week essentially flat against the US dollar. In precious metals news this week, BlackRock stopped issuing shares in its iShares Gold ETF, saying, in an informational post on Berkshire Hathaway's Business Wire website, that the suspension results from surging demand for gold, which requires registration of new shares. In London, as the referendum on whether to leave the European Union approaches, stories appear to be circulating of people waiting in line to purchase precious metals and that some London banks are placing unusually large orders for physical gold. In the UK, Chancellor George Osborne warned that another round of spending cuts would likely appear in next month's budget due to new figures that show the economy is smaller than we thought. According to the Financial Times, Mr. Osborne, speaking just ahead of the G20 finance ministers meeting in Shanghai over the weekend, said that Britain may need to undertake further reductions in spending because this country can only afford what it can afford. Mr. Osborne placed the blame for the UK's spending predicament on tax receipts being persistently weaker than forecast over a number of years, largely due to slower than expected wage growth. The Bank of England downgraded its inflation, growth, and wage forecasts again in February, so tax receipts are not likely to increase in the near future. In Asia, as the US and South Korea prepare to begin their yearly joint military exercises, North Korea is rattling its sabers once more, firing what appear to have been short-range missiles into the sea off its coast in response to news of a sweeping new round of sanctions from the United Nations that many describe as some of the strictest sanctions ever seen. Under the new sanctions, every piece of cargo destined to or from North Korea must be inspected, and many North Korean trade representatives have been placed on a UN blacklist, which would prevent them from even being able to negotiate trade arrangements in the first place. In the U.S., as Donald Trump continues to make headway in his quest for the Republican nomination for president, politics have become a virtual circus sideshow. The Republican debates have devolved into a series of name-calling and insult-slinging unlike anything ever seen in American politics before. The resulting uncertainty over America's leadership come November is also leading many to predict economic mayhem in the U.S. following the elections. Friday's non-farm payrolls report, while better than expected on the headline numbers, still contains items of concern for the U.S. Federal Reserve. U.S. wage growth remains stagnant, the number of hours worked seems to be dropping, the labor participation rate continues to remain at exceptionally low levels, and most of the jobs added to the economy each month have consistently been part-time positions. Persistently low inflation in the U.S. is also a matter of concern for the Federal Reserve, which has stated, along with most other global central banks, that it is targeting an inflation rate of 2%. The likelihood of another rate hike when the Fed concludes its monetary policy meeting this month seemed to be growing slimmer in the face of low inflation and sluggish wages. In China, the economic slowdown continues and may soon accelerate if reports of a massive layoff of between 5 and 6 million state workers can be confirmed. Such massive layoffs even spread over a period of years, and the resulting shutdown of the companies that those employees currently work for could trigger a series of loan defaults that many economists and analysts fear could result in a sudden and sharp devaluation of the yuan against the US dollar. As global economies falter under a pall of fear and uncertainty, interest in precious metals as a store of value for hard-earned cash appears to be on the rise once again. As paper derivatives purported to represent physical gold struggle to find the metal to back their product, wise investors continue to carry out their plans to acquire physical precious metals as part of a well-diversified investment portfolio as buying opportunities allow them to do so. Remember that precious metals should always be viewed as a long-term investment, and that the key to profitability through the ownership of physical precious metals is to actually acquire and own the physical products, and to hold them for the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. Always remember that you should never overextend your ability to maintain ownership of your precious metals over the long term. The Precious Metals Week in Review, March 4th, 2016. Brought to you by Precious Metals International.